Hey folks, Dan Frio here, the rate update. And our goal of the channel is to educate and inform you guys everything real estate, especially with an emphasis on the financing piece of the puzzle. So my name is Dan Frio. I do the rate update every day. I am one of the largest mortgage brokerages in the country. We're here to serve you guys to make sure you get the best rate, the perfect program, the best fee structure, and you get a mortgage consultant that can truly help you. I'll explain that as we go through this video. So let's go over and look at what I do every morning just to inform you guys of everything real estate. So this is our website. Please check it out. It's therateupdate.com. Let's go to the mortgage market summary. This is a newsletter that I send out every morning. So if you want to get this, please subscribe down below. It's free. So you're going to start seeing a nice little theme here. I won't say nice, but a theme. Fed Minutes. Today's news is all about the Federal Reserve. What can the Federal Reserve do? So we go to the CNBC. What's their headlines? S&P falling for the second day. Why? They're waiting for updates from the Fed. We go to Market Watch. What's the news there? Bernanke. Why didn't the Fed act faster? Okay, he's a former federal chairman from 2006 to 2014. He was during the ultimate crash of the whole world. So Ben, just go do your consultant job and stay out of the limelight. All right, so that's all I'll say. The economic calendar. This is the biggest thing that we watch because these events are in a normal market on a normal day. These are what really affect mortgage rates. So the only thing we have coming out today is durable goods orders, and I'm going to show you there's a crack in the foundation here, and I'm going to break down the durable goods orders here in a second. We have oil inventories coming out. They're coming out shortly. And why I watch this is because this is a huge piece of the inflation puzzle, is the cost of fuel, okay, diesel as well as gas. You all know that it's used in basically everything that we use and how things get from one place to another. FOMC meetings, that's the Federal Reserve. They're going to come out and read basically their minutes from their last meeting. It shouldn't really give us any insight into anything. So that's what the news that we have today. But what I want to do is dissect the durable goods orders just a little bit for you. So down through here is breaking them down all the way that they go. The federal, you can see durable goods orders. The previous month we were at 0.6. We came in at 0.4. So it is on a decline. Okay, but durable goods orders X defense. So we pulled out all defense spending. It went from 1.2 to 0.3. Okay. That's a huge drop. And then we have durable goods X transportation. Again, cost of cars way up right now, and people are starting to pull back on that. So you're starting to see where the consumers on durable goods, they're starting to pull away. You also see manufacturing numbers came in a little bit light than we had previously too. So those are the concerns for today, but the biggest news is the Fed. So let's get over to mortgage rates. So mortgage rates, this is basically where rates ended yesterday because it's too early for all the banks to compile all their data and for Mortgage News Daily to publish this. And the reason why I do this is just to give you a benchmark. Okay, so a lot of people don't follow the mortgage market every day like some of us. So they might think rates are still in the threes. I also have people that think the rates are 6, 6.5, approaching 7. So I just do this to give you just a gauge. Think of this as like the Dow Jones. You're looking at the Dow Jones. If the Dow Jones is down, most likely your stock's going to be down. If it's up, most likely your stock's going to be up. So it just gives you the gauge of where we're at. So the rates today, well, where we ended last night is right here. The 30-year fix came in at 5.29. It's down 0.07. We reference that as 7 basis points. It comes in, they got rid of the costs. Thank goodness. They listened to us. Okay, no fees, no cost. Cool. So this is raw numbers. Let's go across here. We got the 15-year fix coming in down 4 basis points to 4.75. The government programs, FHA, VA, and USDA, right in this range here at 4.75, down 0.17. Down 0.17, that's over 1/8%. So if your mortgage advisor isn't watching this stuff for you and helping you make that decision on when to lock, not telling you when, but helping you make that decision, you need to call us, okay? So that's where we are, 4.75 down 0.17. We got the 30-year jumbo coming in at 4.68, down 7 basis points, and the 5/1 ARM coming down 4 basis points to 4.46. You're going to see down through here, our rates are at a 10-year high. The sentiment for today, or the trend, is minimal because we're just waiting for the Federal Reserve to come out and tell us what the heck they're thinking. So based on all this news, what's going to happen with mortgage rates when it opens? Well, this gives me my crystal ball. Okay, so what this chart is down below is the yield, or the price, the price of a mortgage-backed security. So what happens is there's a bond that trades on Wall Street. The yield on that bond is the biggest component of your mortgage rate. So that's why we watch these numbers to see what direction is the yield going. So my charts that I subscribe to are ahead of the markets. I'll put it that way. So meaning I get an alert, I see the charts moving. We might have a crash where the rates just plummet and I hold off. Or we might get a big spike where the numbers move in a direction where mortgage rates spike real fast, as you can see on the one program earlier where the rate went up over 1/8%. What I do is I monitor this market, and then if I see a huge move one way or another, especially on rates going up, I yell basically out in the whole area saying lock them, because that's telling me the market's starting to crash. Okay, so by the time we do that, we have about 15 or 20 minutes to actually lock in your rate before the bank actually adjusts their rates accordingly, because they're following this too. But what they have to do is have to go in and do all their data, that, and then actually publish it out to all of us mortgage brokers. So by the time they're doing that behind the scenes, I'm already locking you in. So that's why we watch this. So let me explain what this is all about and what it does. This actually represents what's going on with the price of the bond. Okay, as the price goes up, like in this case, you'll see it in dark. That means the price is going up, rates are coming down. Okay, so this move might affect rates by 0.05, maybe, but the direction is good. Okay, the direction's good. If you see the chart down below, you're going to see, I think we hit a short-term bottom, and every day we've been up since then. Okay, because everything's starting to subside. And if you really dig into a lot of the numbers like I do, you're starting to see a lot of cracks in the foundation that the economy is slowing, just like the Fed wants us to. So that's my report for today. I will be back later at noon to give you a market update after the Federal Reserve gives us their information, and a midday report that just bring you abreast of the markets and answer any questions that you have, because I do those live. So thanks for watching, guys. If you want to check us out, please don't forget to go to therateupdate.com. You can call us, email us, apply online, and even as of now, you can even chat with us. God bless, guys. Talk to you soon. Bye-bye.